Hello everyone and welcome to this week's crypto update. So what's been happening in the world of crypto? Well, first and foremost, we see here a report by Fidelity Digital Assets. They've said that nation states, central banks are expected to buy Bitcoin in 2025. Why? Due to rising inflation, currency debasement and growing physical deficits will push countries to make strategic Bitcoin allocations. Well, it's already happening. We see here the Kingdom of Bhutan have just announced plans to add digital assets to its strategic reserves. And note it says digital assets, not just Bitcoin. They're also including Ethereum and BNB in this. We also see the Czech National Bank are weighing in on this, with the governor is considering buying Bitcoin to diversify banks' reserves. We also see Russia and Brazil talk about building a strategic reserve. So there's countries, nation states, who are actively in the process of considering putting Bitcoin and in some cases other cryptocurrencies into reserves. Massively bullish news. And of course we have our usual weekly micro strategy, buying more crypto, more Bitcoin. And on top of that, we see the Bitcoin ETFs having a positive inflow once again. Within just 2 days, they've been an extra 1.9 billion going towards buying Bitcoin. So you can imagine, with all this amazing positive news, with countries and huge businesses buying Bitcoin, of course the price is rocketing higher. Well, not quite. It is doing quite the opposite at the moment, having quite a significant pullback. Is this something to be concerned about? Well, or what has caused it? Well, the cause of this is seen to be, why is Bitcoin, Ethereum, and others pulling back? Many believe it's to do with concerns of persistent inflation fueled by strong US economic data and Federal Reserve policy uncertainty. So what's this about? You would imagine if the US economy is strong, this would be a positive thing and therefore positive for risk on assets. Well, the belief is most people in risk on that look to buy risk on assets, whether that's the S&P or Bitcoin or others, is a low interest rates. And so the Federal Reserve, as you know, has reduced by 1% over the last number of months the interest rates. This is seen as being usually positive, and on the run into that, we've seen Bitcoin doing extremely well. Bit of a sell-off before Christmas, but no big deal and quite normal. But now we're seeing a significant pullback in January, despite all the positive news around crypto itself. So why is this? Well, the strong economic data put together with inflation appearing to go back up would be a circumstance in which you would expect the Federal Reserve to be hiking interest rates, not reducing them. And so the fear now is that all the expected interest rate cuts that many had foreseen just a few months ago for the year of 2025, many were predicting 6 or more, now seem to be diminishing. In fact, the predicted the percentage chance of a rate cut in January has now gone as less than 5%. A couple of months ago, it seemed to be an absolute certainty. Not only that, but a federal rate cut in either March or May are now both below 50%. And even more than that, you can see that the CME data shows traders assign a 15% probability the Fed won't cut rates at all this year. And so you can see then why the risk on assets such as Bitcoin, crypto, and indeed the S&P and more have actually had a significant pullback off the back of this data. So where to from here? Well, we've had a pullback. How big can it be? Or maybe it's done. But let's just look at some of the size of pullbacks we've seen. These are the biggest ones in the previous bull runs we've had before. So as you can see already in this existing bull run, we've had a 26% pullback, which was in September last year. If we were to have a 26% pullback from the high of 108,000, then that would bring us back to about 80,000. If we were to have one similar to 2015, 2017, the biggest one there was 36%. That would actually bring us back to about 69, 70,000. And if we were to have one as big as we had in 18 to 21, it was a 62%, and that would bring us back to 41,000. Is that likely to happen? Wouldn't really be on the cards yet, I don't think, but let's just have a look at the chart. So overall, here we can see we've got the daily chart. In the daily chart, this purple line here that's coming up is the 50-day moving average. Back a couple of weeks ago, we were saying we were touching off that there was a danger we come below, and that would be a bear sign should that happen. It did. Last week, we were looking here and saying if you want to reverse this bearish sign, we would need to get back above and close above that 50-day moving average, and we did, which would be seen as quite positive. However, it has broken once again, and you can see this also, the support blue line here. It is, so far it's closing above that, which is positive. So while we are below the 50-day moving average, if it can hold the support line, there is every possibility we regain that again. But it has shown that weakness despite the big buys that are going on out there from ETFs, from MicroStrategy, and the positive news that it's out there. Bitcoin itself has shown a weakness. So if it were to break the support line, where does it go from there? There's every possibility it could move down towards this 100-day moving average. And that brings us in around the sort of 84K. And it also brings us down to that previous sort of support line. So there is every possibility it could come back to there. And should that happen, there's certainly going to be huge opportunities in the altcoin space. Because as we know, when Bitcoin pulls back, the altcoins tend to pull back even harder. If we were to go further than that and we were to lose that 100-day moving average, the next moving average is the 200-day moving average, which also happens to coincide with the tops of the last run, the 74K mark. So if it were to come back to that, then of course there would be unbelievable value. Is any of that going to happen? Of course we don't know. It could find support here, get back above the moving average. That would be a real sign of strength, and then it may, consolidate and move towards new highs. But there certainly is every chance we see significant pullback here. We've seen it in history before. It is showing signs of weakness now that it's lost that 50-day moving average on a couple of occasions, and there is every possibility we see that pullback. Of course, we're on the run into the President-elect Trump's inauguration in just less than a fortnight's time. Many people see that as bullish. Maybe it's going to be a sell the news event. But the key point in all of this is, if we have a significant pullback, it's going to offer up huge opportunities for those who want to go further out the risk curve. And of course, if you're looking to buy into Bitcoin, that also offers you that opportunity. However, of course, the DCA model applies here as always. It could pull back a bit or a whole lot more, or it could go off to the races from here. But it's important to be aware of both sides of the equation. With that, hope you're all keeping well, and we'll talk to you all very soon.